Let's quickly talk about how to pay taxes for a small business. So this is a tutorial, a quick tutorial on writing off every single penny the law allows you to. Welcome back to another edition of the Awesome Sweaty Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka. Now let's roll. In today's conversation, I want to explain to you step by step how to pay taxes for a small business. So this is a quick tutorial on writing off every single penny the law allows you to write off. First, let's talk about the records. It's very important. You need to gather your business records. So if you're listening to me right now, whether you have an LLC, you have a C Corp, an S Corp, you have whatever business legal structure you have, you need to gather your business records. This is important. So make sure you have all your relevant business records on hand. Depending on your business entity, you will need different things, but start by gathering the following. Last year's tax return. Do you have 1120S? Do you have last year 1120? Do you have last year 1065? Depending on your business legal structure. So if you're an S corporation, it will be 1120S. If you are a C corporation, it will be 1120. If you are a partnership or LLC or an LP, it will be a 1065. So get the last year's tax return. You need to have your employer identification number. This is important. Okay, and if you are a business owner, you certainly have, if you are a business, you certainly have received from the IRS a letter confirming your EIN. Also have your social security number ready. And very important, you want to have your financial statements ready. And specifically, you want to have your balance sheet. You want to have your income statement. You want to have your statement of cash flows. And you want to have, in some cases, you want to have your statement of owner's equity. So depending on how large and how complex your business is, those statements can be very easy to produce. Okay, but again, if you have if you have an in-house accountant, tell the accountant to actually gather all those financial statements. If you are by yourself or you have a small operation, you can just get the financial statements from the software you use, whether it is QuickBooks or Xero or Wave. And you also need to gather your receipts and expenses. So first step, gather your business records. Second step, you need to get your bookkeeping up to date. Very important, because hey, the IRS, God forbid, the IRS audits your business. This could be a problem, and we don't want that, right? So when we talk about bookkeeping, what is that? I mean, accurate and up-to-date bookkeeping is possibly the most important ingredients for a stress-free tax season. That's for sure. So if your books, let's say, if your books are a mess right now, that's okay. You can actually hire some staff members to get you caught up real fast. Okay, or you can do it yourself by following these steps. The following steps. Remember though, depending on the complexity of your business, you may have to hire someone else to do it for you. But if you have a relatively small, nimble operation, do these things. You want to record and categorize every business transaction from your tax filing year. Okay, so this is the hardest part, because it will take you a long time. So, but starting from the first day of the tax year, going back to January 1st, you will need to record and categorize every single business transaction. You can use accounting software or an Excel template. The important thing is that you need to record the amount, what category it falls under, the date, and a short description of what the transaction was for. That's step number one. Step number 2, you need to reconcile your books with your bank accounts. This is very important. If there are any discrepancies between your bank statements and your bookkeeping records, it is best to catch this as soon as possible. So you want to get in the habit of cross-referencing transactions in your bank statements with transactions your company records, records, because you want to ensure everything is accounted for. So reconciling helps you know for sure you have recorded every transaction properly. And the best way to do this is to actually get it into a routine where you reconcile your bank statements with your credit cards and your checks every single month. Third, you want to produce financial statements. I just spoke about that. You can do it yourself, or you can hire a CPA or somebody who's versed in accounting matters to help you produce those financial statements. Gather your receipts and invoices. I just said that also. The thing you have to understand here is that when we talk about gathering your receipts and invoices, it is not just about the paperwork itself. I mean, the IRS is okay with having digital receipts and invoices, but you gotta have something. Also, think about filing tax forms for your contractors and employees. Okay, so you have a W-9, you have Form 1099 NEC. You also need to file W-2s on behalf of your own employees using your payroll provider. Step number 3, you need to plan. And it's very important to plan because this will help you, this will actually this will delete the stress during tax season. So when we talk about planning, you need to do 2 things. First of all, you need to determine how much you have to pay in small business taxes. So if your business is taxed as a C corporation, your tax rate is a flat 21%. If your business is not taxed as a C corporation, that means your business itself will not pay taxes, but you personally will, which means you will need to consult the tax tables to figure out which tax bracket you fall under. Okay, so this is important, and you can also go to you can go online, and there are a lot of websites out there that actually can help you calculate your tax liability automatically. It's kind of similar to the business loan calculator you have on certain financial websites. You also have it for tax related websites. So first you need to determine how much your small business taxes will be, and then you need to set aside money to pay your taxes. It's very important. So when you run a business, it's important to remember that you'll be paying taxes based on your self-reported net profits. Keep in mind that in many types of small business structures, namely sole proprietorships, partnerships, and S corporations, you will generally need to make estimated quarterly tax payments if you expect that you will owe more than $1,000 in taxes, or $1,000 in taxes in a calendar year. This means it's important that you always have enough money in the bank to make these payments in April, June, September, and January. Okay, so saving about 25 to 30% of your net business income will make sure that you've got the money required to pay your federal income taxes. Okay, so we actually recommend, and this is based on our research, we recommend keeping this money in a separate bank account from the one you use in your day-to-day business dealings, because this is a great way, to segregate those funds so you're not tempted to dip into the fund that should be going to the IRS. So there are 2 great ways to save this money depending on the structure of your business. So for businesses with a consistent stream of income, you can simply set up automatic bank transfers to regularly pull funds from your primary bank account into a secondary savings account. For businesses with variable income, if you close large deals less frequently, get in the habit of making these transfers manually whenever you receive payment from a client. So with a bit of time and practice, this process will become streamlined and a part of your routine. Let's talk about write-offs. It's important to keep that in mind as you are trying to pay trying to pay taxes for a small business. So you need to claim your small business tax deductions. This is very important, right? I mean, this is a great news. If you are a small business owner, in most cases, you qualify to take advantage of more tax deductions and tax credits than you would as a traditional employee with the W-2. So here is I'm giving you a high level overview of some of the most popular categories of tax deductible business expenses. Keep in mind, this is just the tip of the iceberg though. Okay, so we have actually issued a complete, a long form video about small business tax deduction. All you have to do, go to our playlist. You want to look for the pay taxes properly. We have a folder called pay taxes properly, and search small business tax deductions. In that folder, you get everything. But for here, I'm just gonna give you a few deductions. So you have startup cost. Okay, so if you have expenses that you incur before you begin running your business, you can deduct up to $5,000 of startup costs in the year your business opens. Any startup cost above that amount can be amortized over 15 years. You have raw materials, so you can deduct the cost of the items you had to purchase to provide the goods and services. For example, purchasing bulk, let's say bulk dairy products for your bakery, okay, or ink for your calligraphy business. You have office supplies, so small items for the office, pens, post-its, and coffee are covered. But larger items, for example, desks and chairs, are not, because these are instead considered capital goods, so they are depreciated. You have office commercial rent, so the rent you pay for space where you conduct your business is also tax deductible. You have home office expense. Make sure that you actually have a clear separation of processes here if you run your business from home, and so that you can actually deduct the specific part of the home and the expenses associated with that part that actually relate to the business only the business. You can also deduct insurance. You have business travel. So many types of business travel expenses are deductible, including airfare, bus passes, hotel expenses, cost of local transportation between the airport and accommodations, okay, and 50% of the cost of meals while you and an employee are on a business trip. You or an employee, okay. You also have salaries and benefits. Those are also deductible. Let me give you more details. It's important that you need to, if you want to pay taxes for a small business, you need to keep the details straight on your business expenses. And this is really important because this harks back to what I said earlier about invoices and bills. You know, and in order to claim an expense with the IRS, you will need to have the following info on hand for every single expense. And God forbid, if you don't have those things and you are able to file a return and the IRS comes 2 years later or 1 year later to audit your business, you could be in big trouble. So you always want to be in a position where you can substantiate any expense you write off on your business tax return, okay? So for every item, you need to have the amount, the date the purchase was made, where you purchased the expense or the item, what form of payment you used. Was it cash? Was it electronic? Was it credit card, debit card? The reason for the expense. In other words, the connection of this item to your business. Okay. And for meals and entertainment expenses, it's also very important that you make a note of who was involved, because this could include both your employees and any client present. Because the IRS, if you get audited, if your business gets audited, they might want to check that part also. Very important. So you can record this information in a spreadsheet, in a note on the side of the receipt itself before you photograph it. Whatever works best for you. Or if you have access to accounting software like Xero, QuickBooks, Wave, okay, you can actually input that info in those accounting software also. And again, in the case of an audit, the IRS can ask for all of this information to make sure the expense falls within their guidelines. So if you don't want to be in a situation where you're actually asked to provide documentation regarding a very important expense item on your tax return and you cannot provide that info, okay, because this might trigger other audit events, which you don't want anyway. So this is really, really important to make sure that you keep the details straight on your business expenses. And this requires some kind of organization though. Depending on the size of your operation, of your business, you might need to have some excuse me, you might need to have some organization. Very important. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweaty Kiwi Show. I'm still having a conversation with you about how to pay taxes for a small business. Okay, very important. Now, let's talk about the filing itself. So how do you file small business taxes? So each type of small business files taxes a bit differently. So the forms you will need to fill out for your business depends on the way your business is legally structured. So the main business structures are sole proprietorship, partnership, including both limited and limited liability, limited liability company, commonly known as LLC, C corporation, S corporation, and nonprofit. So we'll break down how each type of small business files their taxes. That way you can quickly jump straight to the information you need. Okay, so filing taxes as a sole proprietor. So sole proprietor is exactly what it sounds like. It's a fancy way of saying an unincorporated business that has only one owner. So in business slotted into this category, there is no legal distinction between the owner and the business entity. So if you run, let's say, if you run your own company with no partners, filing taxes is incredibly simple. All you have to do is fill out a Schedule C when you file your annual personal tax return. The IRS Schedule C is a form that you attach to your main individual tax return on Form 1040. So essentially, it just gives you a way to tell the IRS about the profits or loss from your business. So that's if you file taxes as a sole proprietor. If you file taxes as a partnership, partnerships filed Form 1065. And then each individual member will include a Schedule K1, showing their individual share of the profits and losses for the year when filing the personal tax returns. So Form 1065 gives the IRS an overview of the company's profit or losses for the year, but the K1 is where each partner actually reports and pays taxes on the shares of income from the business that year. If you file taxes as a limited liability company, if you are the only member of your LLC, it's really simple. Just follow the same rules a sole proprietor will actually follow, and fill out a Schedule C when you file your annual personal tax return. If your LLC has 2 members or more, it's only a hair more complicated than that. In this case, you will file more like a partnership does. That means you file Form 1065 and you attach each individual member. You attach each individual K1. So each member will get a Schedule K1 that displays their shares of profits or losses for the business. Okay, and if you file taxes as a C corporation, if your small business functions as a C corporation, or if you treat your LLC as one, you will need to prepare and file a separate corporate tax return with Form 1140. In addition to preparing your personal tax return, the IRS has instruction on their website for that. Filing taxes as an S corporation. If your business is an S corporation or an LLC that has elected S corporation status, shareholders will need to report their share of profit or loss using the Schedule K1 on their personal tax returns. Okay. In addition, the corporation also needs to file a corporate tax return using Form 1120S. So if you have to file taxes as a nonprofit, well, nonprofits are taxed differently than for-profit companies, and in most cases, nonprofits can apply to the IRS to become exempt from federal taxes, so under Section 501. Let's talk about your tax tally. Very important. So self-employed taxes. So most self-employed folks will operate either as a sole proprietorship, including independent contractors, limited liability company, partnership, or S corporation. All these structures are considered pass-through entities, meaning your earnings are reported as part of your personal income. Since you are your own boss, you will need to pay self-employment taxes, which is comprised of Social Security and Medicare taxes. The total, and we have done this on other shows, but I just want to quickly say that the total self-employment tax rate is at right now 15.3% of your income. So we also have to think about sales tax. So sales tax is a state tax that you are required to collect from customers and remit to the government. So it is not really a liability for you. It is more of a transfer for you. You are the middleman. You are. So even if you're an e-commerce store without a physical presence in any state, you are still on the hook for sales tax. So depending on the state, you might have to file a sales tax return monthly, quarterly, or annually. You also need to think about payroll taxes. So as an employer, you are responsible for a few payroll-related taxes. So we have FUTA, federal unemployment tax, effectively a 0.6% tax. You have FICA, 7.5% tax for Social Security and Medicare. You have to collect and remit employee income tax. You have state and local tax, different depending on the state you're in. Okay, this is important. And you also need to think about how, now the thing is, luckily, the Tax Cuts and Jobs Act has changed small business tax a little bit. So now you have the corporate tax rate was reduced to a flat 21%. I mean, this was a tax reform that actually took effect on January 1st, 2018. And the cool thing is you have the QBI, the qualified business. We have actually covered this on multiple shows, so I'm not going to go into detail here. But you have a lot of changes. You have the corporate tax rate reduction. You have entertaining clients that you can no longer deduct. You have office snacks and meals are now 50% deductible. They used to be 100%. So there is a constellation of changes. And if you want to pay small business taxes, and you remember, most small businesses are required to pay estimated taxes quarterly instead of annually. So submitting your payment to the IRS is a breeze. Just fill out Form 1040-ES and mail it along with a check to the IRS, the nearest IRS office. And you can also pay estimated taxes online or by phone via the IRS Payments Gateway. Okay, so for corporations, payments must be filed through the Electronic Federal Tax Payment System, the EFTPS. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how to pay taxes for a small business, and I gave you a tutorial on writing off every single penny that the law allows you to write off. So we spoke about records, we spoke about accounting, we spoke about planning, we spoke about write-offs, we spoke about details, we spoke about filing, and we spoke about your tax tally. Thank you so much. I will see you next time. But until then, remember, stay marvelous.